The tax bill recently passed by Congress has lots of advantages and disadvantages for real estate agents. But there's also a lot of urban myths and legends about what we should and shouldn't do in terms of incorporation and so forth. On today's edition of WVAR Briefing, we talk with Chris Lambert of Settle & Stonecker, a CPA, to tell us some of the tax changes and how they can benefit realtors. All right. Full disclosure, today we're here with Chris Lambert. Thanks for coming, Chris. Along with his countless areas of expertise in tax and accounting, Chris is our auditor and accountant. His firm does our accounting work for the West Virginia Association of Realtors. But we don't want to talk about that today. Today we want to talk about the new tax law, the new tax bill. We're hearing all kinds of stuff in terms of the things that realtors can and can't do and the new advantages they have as a result of this new tax bill. And we're hearing people say we want to be an LLC. It's better for us than a Schedule C and so forth. And so I guess just we could talk about specifics in a minute, but just give us kind of an overall picture of the differences. Are there advantages, disadvantages, anything realtors should know about in this new tax law? Okay.
So really there's not any advantage of being an LLC versus a sole proprietorship or Schedule C that they've been filing. The new tax law did make some changes to the rates and to the deductions, but as far as being an LLC or a Schedule C, there were no changes in this tax law that will affect that. So I would recommend not going the LLC or the corporation rate just to save yourself the money of preparing extra returns and the other hoops you would have to jump through to be an LLC. You're supposed to keep minutes. You're supposed to have meetings. You have to have $1 million worth of liability coverage for the LLC. So there are other expenses of being an LLC that you wouldn't have as a sole proprietor.
Can you, as an LLC then, so you said you have to have minutes and stuff, so you actually have to have you can't be sort of a one-man LLC, you have to have or one-person LLC, you have to have a board or other officers or something? Or?
Well, you can be a one-person LLC, and you can probably get away without the minutes, but that's all part of an LLC. Is supposed to be treated like a separate, distinct entity, like a corporation, and you're supposed to do some of those same things as an LLC, as a corporation would.
Mm-hmm. So there's no real, I don't know how these rumors start. There's no real advantage. Is there any advantage to any sort of versus a Schedule C sole proprietor? Maybe they should do this or that, or is it pretty much just be that Schedule C sole proprietor?
The Schedule C sole proprietor is going to get them the exact same tax cuts and ramifications of this new law that an LLC would. And
so no, hey, you got to do this or do that, or cheaper insurance, or I don't have to pay taxes on all my commissions because I can draw a paycheck. None of that stuff.
No, none of that stuff. You run into if you're going to pay yourself as an LLC. As a member of an LLC, you cannot be on payroll to begin with. You'd have to take a distribution, which was your share of whatever the company makes, just like your Schedule C, your sole proprietorship. You can only spend what you make. Mm-hmm. But the big change was the new 20% deduction that they're going to give sole proprietors, LLC members, and S corporations.
And everybody gets that. So I don't get more because I'm a Schedule C, or I don't get more because I'm an LLC, or what is it, PLLC for attorneys? And
yes, PLLC for attorneys and accountants and doctors, but it's the same as an LLC. No, you don't get any difference for one or the other.
And so in essence, you're going to get, and I will make sure I say this right. I'm an LLC, I'm a sole proprietor now as a realtor.
Yes.
And if I stay a sole proprietor and the agent at the desk next to me becomes an LLC, there's virtually going to be no advantage that person has that I have.
That's correct.
And they're going to have a lot more paperwork to go through.
Yes.
So it's, we've heard, and that's why I wanted to bring you in, because we're hearing all this stuff about, oh my gosh, in this new tax law, we've got to do this, and now we can do that. We never could before. And apparently none of it is accurate.
None of it that I'm aware. I can't think of any reason or any deduction you would get as an LLC that you wouldn't get as an individual.
And then the change for me, which we talked about, for those people that are employees, like I could use this as an example. I've got this branded shirt, and I could go buy it and have it embroidered, and I used to be able to take it as a non-reimbursable business expense. And for employees, though, all that stuff's gone now.
Yeah, what they did, they did away with the miscellaneous itemized deductions on your tax return. That's where buying that shirt out of your pocket would have went. That's where paying your CPA to prepare your tax return would have went as an individual. Your safety deposit rent, your gambling losses, your any other unreimbursed business expense, education or licenses that your employer didn't reimburse. You could deduct all those things previously, and those all went away under this tax change.
And so that's just all gone. Now, if
All
you're a realtor, an independent contractor, all the branding and company clothing and stuff is still a deduction.
Yes, any expense to carry on your business, which would be, logo clothing or anything like that, is still deductible for the business itself.
But just not for if you're an employee of the business.
Correct.
And would you be, again, I want to go back to this, belabor it, but you said you can't have employees. So if I decided I want to be an LLC, I still wouldn't be an employee.
That's correct.
I'd be an owner or whatever, an officer, whatever.
You'd be a member is the technical term, and the member is the same as a partner in a partnership. So one person LLC is a member, but or you can be a member of a multi or partner, but you don't take a salary. You just take a distribution of whatever your share of the profits. If you're the only owner, you get all the profits, but
those profits are still just as taxable as if it was a paycheck.
They are.
Or if it was a commission check or whatever.
Yes. At the end of the year, your profits go on your individual tax return as a member or a partner, and there you pay your income tax and you pay your Social Security and Medicare tax, just like you would as a sole proprietor on your Schedule C.
And there's no difference of me taking that money, and I don't take the whole thing as a distribution, so I don't have to pay taxes on what I don't take, or I have to take it if I'm the only person that. I mean, I'm not trying to be difficult. I'm just trying to figure out why all these folks are saying it's such a great deal.
It's not. I mean, whether you take it home or whether you leave it in your business as operating capital, you still have to pay tax on your profit for the year.
So I'm going to pay tax on that money, whether I put it in my personal paycheck checking account or whether it sits in the company that the LLC that I'm a part of.
That's correct.
And it's the employment taxes, Social Security, all that stuff.
All that, until you hit the limits.
Right.
On the Social Security limit. Once you're above that, obviously you don't pay, but everything below that you pay those taxes on, whether you're whichever entity you choose.
Is there? What about? And I asked this question. What about? I guess what would it be if a C corp? And when do you actually have employees? What's the?
Well, you can have an employee as an LLC. You just can't be an employee.
Okay.
So if you're a big enough realtor that you need an assistant, and they're not a realtor, they're like an administrative assistant, or they're not. You're not treating them as a
partner,
another owner with you, or they're not another realtor that you're both are in a partnership. But if you need an assistant, and they're not an owner, they can draw a salary.
So they could be an employee.
Correct.
And you can but you would pay. Would you pay half and they'd pay half since you're an employee of their Social Security taxes and all that?
Yeah.
And so they can't be a 1099 or a Schedule C of an LLC.
No, well,
I mean they could be. You could hire them as one, but
if this was a real estate company and you hired agents, obviously you could treat them all as independent contractors, and you could be the single member LLC owner of this company. But you can't be an employee and get a 1099. So you can't be treated as an independent contractor part of the time and as an employee part of the time.
But if I'm the owner of the LLC, I can have both independent contractors and employees.
That is correct.
So, and that's kind of way if I have an assistant or
yes.
secretary and agents, that's the way they probably do it.
Yes.
But it's just it boggles my mind because of all the stuff I've heard since the tax bill passed, of all these great things that why we need to incorporate and do this, and it's just not. Now, most brokers, I think, have been LLCs for a long time.
Yeah, I'm sure they are. If they have other people working for them, they probably have went to the step of becoming an LLC, because if you it's easier to get a tax ID number when you're an LLC, or you have to get a tax ID number when you're an LLC, and when you're sending out the 1099s to the brokers who are working for you, you want to send it out with that 1099 with that tax ID number rather than your Social Security number. So there's some things that they would want to do. They have people working for them, quasi, not true employees, but independent contractors, and they probably want that liability protection that the LLC affords. But an individual realtor, I mean, you said you keep hearing that everybody should be an LLC. Being a CPA, I haven't heard that, so I don't exactly know where that's coming from or why.
Well, it's just within the ranks of
Yeah.
the real estate community.
where they're picking that up.
And I don't know where it originated. But they just, that's all we've been hearing since it passed. Is there, what are the things that, and let's just say, okay, you stay where you are, stay as your independent contractor, your Schedule C, whatever, but what are the things that are going to be better for you in the new tax bill?
Well, there were a lot of...
As the Schedule C.
As a Schedule C, I think the deductions are the same. What Congress did do for the individuals were they increased the tax brackets and lowered the tax rates. So everybody's going to get a tax cut. So if you were in the 25% bracket before, now you'd be in the 22% bracket. So the brackets are different. The standard deductions changed. The standard deduction almost doubled. For married filing jointly, it was $13,000 in 2017, and 2018 it'll be $24,000. They did take away the dependency exemptions. So you may have heard that if I have another kid, I get another $4,000 dependency exemption. Those go away. There are no more dependency exemptions. They also take away some of our deductions. So they capped state, local, and real estate taxes at $10,000 a year. So you lose some of those things as an individual, but you get the benefit of less AMT.
And that's the SALT stuff, which in West Virginia it's not real impactful on us like it is in California and New York and those places with high local taxes.
We don't have super high rates, but our top rate's 6.5%, and then you throw in real estate taxes on a house and maybe a vacation house. It's quite easy to get over that $10,000 limit pretty quick and be capped. And then mortgage interest loans were capped as well under the new law.
Is that $750,000?
At $750,000. Now they grandfathered every old loan in, so if you had a $1 million mortgage, you can still deduct the interest. They took away the deductibility of a home equity line unless it's used for primary residence. So
so if I use it to build a deck, it's okay. If I use it to buy a boat, it's not.
Correct. Now, when we get your stuff to do your tax return, I'm not sure how we know that.
That's what I was just going to
ask. And how
the
bank is going to report that, I don't think they are. I think every individual is going to have to be on the honor system, and I don't know how the IRS will enforce that law. But
it's going to, and if they do, I could see an audit being a nightmare. So I got a $10,000 home equity loan, but I bought a refrigerator and a couch, and I did all these different things with it that were all related to my primary residence, but they were 50 little things.
Yeah,
that's going to be a.
We don't know. Congress passed this on December 22nd, I believe, of 17, and the IRS still has not written implementation guidance to us, so we don't know how they'll implement some of these laws that were passed. Those are some of the individual changes. On the Schedule C, there's nothing changed on the deductibility of all your business expenses. You still get your, the only thing I guess they took away was entertainment expenses. So if you were, taking a customer to a ball game, that entertainment expense is not deductible any longer.
Or it becomes advertising expense.
Or it becomes advertising, if you want to call it that. But, so, meals, you still get 50% of your meals, but they took away entertainment expenses. It used to be meals and entertainment were both 50, but entertainment goes away.
And I don't want to pry into your client world, but if you have real estate agents as clients, I guess I'd ask that. Do you see, to me, I'm not sure how much impact that has. Do you see a lot of the entertainment deductions in the real estate world? Or
we don't really.
Maybe companies do, but in terms of individual agents.
No, you don't see it much for the individuals, or maybe at all, but it's more company wide, and businesses lost that deduction as well. So it wouldn't matter whether you're a corporation or a sole proprietor, you still lose entertainment expenses.
And that's, unfortunately, in our fast-paced world we live in, there's not a lot of people taking clients to lunch anymore anyway. So it's
no,
maybe golf trips in some worlds, but not the real estate world. And so I don't think that would be a huge impact like a lot of the other things were. So other than you're getting double your deductions, you got everybody's got at least a smaller or lower tax bracket to even if it's a tiny degree. But otherwise, it's the life of the independent contractor hasn't really changed in terms of taxes.
Not really. Like I said, the rates of things will change, how they can deduct things will change. The one big change that will affect us all, if we're self-employed, whether we're an LLC, a sole proprietor, an S corp member, is Congress reduced the corporate tax rate on C corps to 21%, and to try to keep a level playing field for all the other entities, those S corps, LLCs, and sole proprietors, they gave us what they're calling a 20% reduction. Mm-hmm. And so the way that will come through is you'll file your taxes just the way you had in the past on your Schedule C. You'll put all your income and all your itemized deductions on your tax return. And once you get below the line where itemized deductions were deducted, there'll be a new 20% deduction against your self-employment income from your Schedule C. As long as your combined joint income for married filing jointly is not above $315,000.
But you have that as a Schedule C, as an LLC. I mean, it doesn't
Yes.
matter. It's not like you have to move somewhere to get.
No, it's to kind of help all of us self-employed LLCs, S corp people to treat us fairly along with the C corps. So I guess to keep us from having to go to the route of becoming a C corp.
Okay. Any final thoughts you want to share with good free tax advice for
free
realtors?
tax advice? Well, all the returns that I prepared in 2017, we had a thing in our software that would take their 2017 income and it would put it on a 2018 return against this new law in the brackets. And except for one or two exceptions, every person I had, no matter what, will pay less tax in 18.
And that's a positive.
And some it's a few $100, some it's a few $1,000s. The only people who that are really, really high earners above, a couple $1 million, and you sometimes will miss that donut. You'll be in that hole where you'll pay slightly more. But otherwise, the new rates, the expanded child tax credits, the lowering of the rates and the AMT, everybody's going to pay less taxes, which is a good thing for us
taxpayers. Yeah, I mean, and that's it follows suit. I mean, they always make that argument. I mean, the more money you make, the more taxes you pay. So the less taxes you're going to pay when you get the tax break. It's simple. So, all right, I appreciate it, Chris. Thanks for taking a few minutes with us.
Thank you.
Thank you for joining us for this edition of WVAR Briefing. I hope our little discussion with Chris has cleared up a lot of the mysteries and myths about the new tax bill.